Hello again, the show is Smart Money, the show that tells you how to play your money right so that your money keeps working for you in the long run. And with the new director tax code coming in, life is going to change. It's going to happen in 2011. We've got lots of questions on this. We are answering some of them in Smart Box.
Which of the major sectors would benefit from the new direct tax code?
Under the new direct taxes code, I think first of all across the board there is a benefit available because the lowering of the corporate tax rate. The corporate tax rate presently, it works out if you add surcharge and cess in respect of companies having income exceeding rupees 1 crore, it actually works out to 33.99%. That tax rate is proposed to be reduced to 25%. So across the board there will be a benefit available to all the sectors. Secondly, you have carry forward loss which is now available for only 8 years. It will be allowed to be carried forward indefinitely. So again, that's a major change which will help many companies. On the other hand, lot of tax incentives which are currently available have been either tweaked or have been removed. Lack of benefit for export sector definitely is one thing which is very, very sort of noticeable. But the tax benefits are being continued for the power sector, infrastructure sector, food processing sector, then also mineral oil and gas, where now the benefit will be in the form of an investment based deduction rather than income based deduction. So I think these sectors will benefit on the other hand.
Hi, I'm Snehal. I am in marketing. My question is, what is tax with indexation and tax without indexation?
Under the direct taxes code, there is a complete change in the system of taxation. So first of all, the security transaction tax is being removed. Again, you need to ascertain whether the shares are being held as investment or as business asset. Assuming it is held as an investment, then the long-term capital gain, again there is a change in the definition. Earlier long-term capital gain meant if you were holding the shares for more than 12 months. Now it means it should be held for more than 12 months from the end of the financial year in which you acquired. So any long-term capital gain will be taxed at the normal rate. Only you will get the benefit of indexation. Now indexation means that any adjustment on account of the inflation of the cost of acquisition. So if you acquire the shares before 1st April 2000, now 1st April 2000 will be the base date. The value as on 1st April 2000 will be taken, and then the cost inflation index will be applied to arrive at the cost of acquisition. If you purchased it after 1st April 2000, then whatever is the actual cost, you apply the again inflation index and you calculate the gain. The rate of tax will be the normal tax rate. So therefore it can be as high as 30% for individuals and 25% for companies.
Do I need to mention my mutual fund gains while filing my income tax returns?
As far as the units of the mutual funds are concerned, at present if you make investment in any equity linked mutual fund, you can claim deduction under section 80C up to rupees 1 lakh. Secondly, whatever dividend you are getting on these units is tax free. Thirdly, any equity oriented mutual fund, the long term capital gain and short term capital gains are taxed in the same manner as in the case of listed shares. So what we saw just now, that if it is more than 12 months, you don't pay any tax. If it is less than 12 months, you pay tax at the rate of 15%. Now under the direct taxes code, again this is proposed to be changed. Now first of all, the ATC deduction is being replaced by a new scheme of taxation, whereby it will be what they call it EET, which means when you contribute you claim exemption, when you earn income on that you claim exemption, but finally when you receive the money again it is taxable. Those instruments have not been notified as yet. It will be notified in due course of time. Assuming that mutual funds will qualify in that, you can make investment up to 3 lakhs under the direct taxes code.
Well, keep the questions coming. You know our email ID. It's smartmoney@utvi.com. And if you'd like to SMS us, just pick up the phone and type smart, put your name, your city, your question with space in between and send it across to that number that I always mention. It's 59995. With that, it's a wrap on this edition of Smart Money. But remember, every Wednesday at 7 o'clock, we come to you live. We throw the lines open so you can talk to us and get all your personal finance issues sorted out. But until we meet again, keep learning, keep watching on UTVi.